My name is Kathy Yee, and I'll be moderating this session. I have with me here David Chang, Gayatri Sakar, and Miguel Galvez. I'm going to have us all do brief introductions of ourselves before I talk a little bit about this session, how it's going to go, and then, get started with the questions. Let's start off with David, who's the first on my screen.
Hey everyone, so glad to be here. I'm a huge fan of Startup Boston and I'm excited that we're going to share this session with you. My quick backdrop is I'm an entrepreneur and angel investor. I've been with 6 Boston-based startups, most recently a fintech that was acquired by E-Trade at the end of last year. I've done about 60 angel investments and co-founded a new group called TBD Angels at the beginning of this year. My experience around startups as a board member has primarily been at the early stages, either a board member or exec chair, and all the way to some more informal roles as an advisor. And so I'm happy to share any of those experiences with everyone.
Nice, thanks. And then next on my screen is Miguel. Yeah, go ahead.
Hey everyone, my name is Miguel Galvez. Like David, I've really enjoyed being part of the Boston startup ecosystem. I started when I was an associate at Techstars back in 2012 and have really enjoyed being in the scene since. I'm the co-founder and president of a specialty chemical company called MBD Nano, which is venture backed, post Series B, revenue generating and growth stage. And then in addition to that, I also helped start and I'm a general partner of SSE Venture Partners, which is an affinity fund for Boston College alumni. We do, 50K checks and have invested in over 20 companies.
Nice, thank you. And then Gayatri, yeah.
Hi everyone, so super excited to be part of Startup Boston. I want to give a big shout out to Stephanie for doing this amazing work and all the volunteers that are coming together to make this possible. I think this has become like a great movement. So excited to be part of this movement and to be part of this esteemed panelist. My background is I am a partner at Hype Capital. We are the venture arm of Hype Sports Innovation. It's an Israeli fund. And we are the world's largest sports accelerator. So we back tech companies which have sports as use cases, early seed, and then from the fund we back post-seed rounds. We write checks from $500,000 to a couple of millions of dollars. So whenever I'm writing the check as a lead investor, there's a clause that we need to be a board of director on the startups. Beside that, I also sit on a few large asset management funds board. So have some experience with late stage companies investing, but I do not sit on those companies board. I also do sit on a couple of companies board that are part of my own angel rounds that I have done. And my background is former Goldman Sachs, Federal Reserve Bank of Boston, Hewlett-Packard, IBM. I had a consulting company. I come from a big data background and I had a failed company. So have few experiences to offer. So excited to speak about them as we go further along.
Nice, thank you. As mentioned earlier, my name is Kathy Yee and I'll be moderating this panel. I have some startup experience too, and I'm really excited to be part of Startup Boston Week this year in 2020. I'm the founder of Inclubi. It's the IMDb or Rotten Tomatoes for diversity in film, where you can rate and review movies based on diversity and representation. Before this, I did engineering project management at Johnson & Johnson. I have 2 patents in medical devices and got my master's and bachelor's in biomedical engineering. So now I'm doing social impact and entertainment in a startup, so completely different. And I'm really excited to be working on my passion full time. Okay, so a little bit about this talk. As the description mentions, if investment capital is the water that startups need to grow in, then a stellar board is the fertilizers. Advisors are a key part of any successful startup, whether the founders are in their early stages and it's more informal with mentors, or if they're more officially recognized as members of an advisory board. So good advisors do several things. They, 1, add expertise, connections, and credibility. They can open doors and really make connections and help with partnerships and investors. They can help warn startups of potential pitfalls when they're approaching them. They can help hire key team members in roles that the founder may be weaker or less familiar in. And they can provide a wonderful sounding board for the more difficult decisions that founders face. So I'm really happy to have you all here with me today and to listen to our seasoned investors and founders. We hope to share with you so that you can learn how you can make the most of your seat on the board and positively contribute to the growth of your portfolio companies. So a little bit about the plan and the audience here. We're gonna kind of have the questions catered to different types of audiences. One, advisors and board members, people who want to learn how to best support their portfolio companies. Two, any founders in the audience, so you can learn how to choose your board of advisors. And definitely any community members who are just curious and want to learn more. So yeah, without further ado, there's a chat in the session. So if you have any questions, feel free to just ping them in the chat board, and then I'll take a look through, and then hopefully we can get to some of them. So yeah, without further ado, let's get into the questions, and let's start with Gayatri on this one. What is the difference between being on a board of director versus a board of advisors?
Wow, that's a very heavy question to start with. And I think everybody has their own opinion. I'm sure David and Miguel has his opinion, but I can start with saying this. Board of director is it's a very fiduciary responsible position, and also very much legally defined, and it is also elected by the shareholders, the chairman of the board, and you are mostly responsible for the shareholders. Your actions and your duties are towards the shareholders of the company, the chairman of the board, and not towards the employees, or the management team as such. And it is very much legally governed, and there are the corporation bylaws are there, and also you are personally liable for any kind of mistakes, and because of the compensation and other opportunities that come in the way. And your advisors are very important for the need of the organization and the shareholders. So it's a very different kind of a role. And with Sarbanes-Oxley comes into effect, it also enhances the risk and the accountability of the board of directors. So obviously, if you're joining as a board of director or you're hiring a board of director, you need to make sure you have the D&O insurance, which is directors and officers liability insurance, which is a little bit different than the professional liability insurance. Whereas a board advisor is kind of different. It's more like you are a mentor, or you're helping the CEO or the management team. And considering the fact that board of directors cannot be easily removed or expanded or created very easily, because it's a fiduciary governed role, whereas board of advisor is something which is much more fluid, and you can have a term role, and you can recruit people based on their skill sets that you do not have within your management team, and you need someone. And I think that all of these roles, whether it's board of director, advisory roles on the board, all depends on what kind of companies you're serving, whether it's a publicly traded company, large cap, small cap, or startup, or large asset management funds. So PE funds or venture capital funds also have board roles. So it totally depends like what you are serving. And that's how things can also get changed. But I think the insurance factor is something very important to consider for both the roles.
Okay, nice, thank you. And then yeah, David, Miguel, do you have anything to add to that? There's a difference.
I'll chime in a little bit. There are definitely different flavors of board members, both on the director side and also the advisor side. So when I think about, especially at VC-backed startups, the typical composition of the board, you'll have some investor types, right? So you've got a large investor, they sit on a handful of different boards. they really represent like a particular venture capital firm. There's a flavor of board member, which is more of on like the founder side, right? And so especially in your early days, you'll likely have board members that were co-founders or founders of the company. And then there's this other role that tends to evolve as like independent board members, right? When you get to that stage. And so depending on how you set that up, you tend to want to have odd numbers so that there's tie breaks and kind of all that sort of stuff. And then on the advisor side, I've frequently heard from people that it's actually a lot more fun to be an advisor than a director for exactly the reasons that Guy actually shared, that you don't have the same level of liability and responsibility, to be frank, the fiduciary responsibility. And then there are different flavors on the advisor side. And Kathy, you had alluded to this in the beginning, which was there are some advisors that fill a gap, like a knowledge gap. I think of them as doers, right? So maybe your background is technology and you don't know anything about marketing. So you get an advisor that really knows the marketing side. There are advisors that are connectors, like people that know an industry really well. And they're the ones that are able to put you in touch with the customers, partners, and anyone else in the ecosystem. And then there's a handful of other advisors where I tend to think of them as almost like celebrity advisors, that for a particular startup, if you have that person as an advisor, it's kind of like, oh, game over sort of thing. And so these different flavors are something to take into account, both if you're a founder in terms of how to compose the board of advisors or directors, and also if you're considering joining something, like know your role and know your part and how you complement the others that might be on the board.
Mm-hmm.
Yeah, and then I'll just add a little bit. I think both of those responses pretty much cover in depth, but just a couple things. I think, board of advisors tend to be really for early stage companies, I find, usually because there's just not enough experience in the management team, there's lacking knowledge. Usually over the life of a business, the institutional knowledge is filled internally. And then really the board of directors, as Gayatri mentioned, is really more of a fiduciary construct to represent the stockholders. The one exception that wasn't mentioned earlier that I think is a little interesting is in more like science-based companies, particularly biotechs. You have often scientific advisors, and those folks are usually folks that have deep technical expertise or regulatory expertise, and those are the folks that either can be, as David mentioned, folks that you look for credibility, but also can play an important function, particularly in biotechs as they go through the clinic.
Okay, thank you. So I know David and Gayatri, you both have a lot of experience as board members and board and advisors.
I actually have more than me, but
No.
Yeah, I was going through your portfolio, your LinkedIn before, and you both advise a lot even right now. So you must be asked by many companies to advise. So how do you make your decisions? How do you decide which companies to advise and which founders to mentor?
I'll ask David to take it first. He has been in this industry for a very long time.
Yeah, I guess it comes back to, maybe this is to the audience, right? Like, why are you doing it? Like sometimes it's legitimately in an industry where you could completely change the trajectory of the startup, right? It might be an industry that you've been in for 20 years. And so when I think about some companies where I've jumped on board as either an advisor or a board director, it's through that lens. I'm like, okay, you know what? I can really add value. And so that's the sort of industry connector part of me. And then there are others where I'm more passive. And so if anything, I'm kind of more just on call. And so it might be some mission that I'm particularly supportive of, but I don't have the background. And the other panelists here have very different backgrounds from me. And so like I could completely see in some other industry that's not software driven, I have very little expertise. And so in which case, like, what real value am I providing? It might be more general, might be more about like how to fundraise, but it's not going to be that deep technical expertise that particular founder would need. And so when I choose companies, I just want to make sure that the founder understands and I understand what the expectations are, and we want to make sure that we're on the same page.
Yeah, I totally agree. Just to add from my point of view, I think it also depends like what kind of trajectory you are on in your career, or what kind of things that you want to get out of it. That's very, very important. When I started being an advisor, it was more like board of director because we are writing the checks. Sometimes when I write angel checks also, I request that, at this early stages, can I be a board of director? And it's just a request. Sometimes the founder's like, okay, I'll take it. I'll give a shout out of a company called Signwords. It's an EV battery charging company. And I'm a big advocate of climate change, and I have no idea about hardware side of the company. Though my husband works in the chip designing area, so I sometimes take his advice. But I'm on the board of that particular company because I'm not an expert on the EV side, but I'm passionate about the project. I want to help them with my Rolodex, what can be done. So that's another thing. And then I sit on a couple of large asset management funds board because of my experience on the fund administration and the Rolodex that I bring on the table. And sometimes they need certain advice on the fund side, especially on early stages and others investments, or in the PE side or the hedge fund sides, the Rolodex that I bring it to the table. So it's totally depends on both the sides. It has to be very mutual. And what I bring it to the table also has to be very complementary to the company or the funds or the startups. And I also feel that there should be a fulfillment factor. Like you should be, once you join the board or be a part of the team, it's almost like you're part of a mission that you want to help them, you want to achieve certain things, the milestones, you want to get rid of the bottlenecks that are coming on your way. And everybody has their own skill set and roles to play. And I think it's important that you know what you want out of this and what they want out of this. And if it's well known, it's established, then it's easier to serve, because otherwise it becomes like a sad scenario. You're on the company, you're nothing to offer, and then the founders also have nothing to get from you. So I think it's a very symbiotic relationship.
Okay, yeah, thank you. And I see now we have some questions in the chat, so I definitely want to get to those too. But yeah, before we get into that, Miguel, I want to ask you from the other side of it. How do you as a founder like choose your board of directors or your advisors and mentors? What do you look for?
It's a great question. So, we got really lucky where, our first angel investor was a pretty sophisticated VC and ended up, on a small 25K check, and really became, this is David Anderson from Supply Chain Ventures, if anyone in the audience knows him. But he was really kind of a mentor figure and really guided myself and my co-founders. We were really young. We were 21 when we started the business. But over the years, he's maintained his board seat, and I would consider him closest to an independent, where he's always looking out from our interests, and how we're feeling and how we're doing and where we can improve, versus a lot of the later stage VCs have taken on board seats, and they're really representing their interest and their fund's interest, which can be sometimes conflicting to our own. So I think as a company progressive, it becomes a lot more about shareholder value and who's representing what interest. So I think early on, it's really important to get folks, like in my case, Dave, who, despite 9 years in the business, is still giving advice and mentorship on behalf of the founders, and not necessarily on the interest of the large investors.
Okay, thank you. And yeah, we have a couple of questions, so I'll actually get to that now since that's on my list anyways. But yeah, how is compensation allocated to the board of directors? Advisors and mentors are more kind of consultants or more informal, I guess. But yeah, is compensation based on equity and how much? And yeah, can you guys talk a little bit about that? Who wants to start? Maybe
I
David,
guess I could share a little bit about this. And again, my experience is colored by the early stage startup ecosystem where I live. And so for venture-backed startups, from a compensation standpoint, where I usually, maybe we'll start with the advisor side, which is a little bit easier, and then we'll work up to the board side. I tend to think of like a graduating scale in terms of like level of involvement. And so at the very base of the pyramid, you have this like wide set of informal advisors. Concrete, let's just use as an example, it's a Series A backed startup. It's been around for say 3 years. You probably have, again, this is just for illustration's sake, you probably have more than like a dozen informal mentors and advisors, right? And probably even more than that. And so over time they fill a specific role. Nowhere is that compensated, right? And so these startups typically have just like this group of people, they're just fans, right? And so that's the base of the pyramid. One step up from that is actually adding someone officially to your advisory board. And I tend to see stuff anywhere between like quarter point, maybe vesting over 2 years. I see a couple cases where it's more of like 0.5. In the outlandish cases, maybe like 1%. But then that person's actually doing more work, right? Like they're more than just on call. And on the board side, I also see a pretty wide range in terms of equity. There's a handful of examples. Those early stage startups have board members that typically have what I see as like the equivalent equity as like a VP level member of the management team, right? And so if you're at a stage where like all the VPs have like 2-3%, I see some board members with roughly that. And I'd love to hear contrasting data points from others, but in my experience, that's what I've seen. And then if you kind of graduate, if beyond that, I tend to see startups that then have roles that like promote that director to something like like a chair role or an executive chair role. And in which case that person may actually be drawing compensation as well, like cash compensation out of the company. And so it's a kind of a wide range, but it's obviously dependent on the specific person, the specific role, and the specific fit within that particular startup.
Okay.
Yeah. I can add to that. I totally agree what David said. I think it's which stage you are in as a company. Early stage, you don't have money to pay yourself. You're trying your level best to pay some money to your employees. So all the advisors are helping you out. But I think once you go beyond a certain stage, you need to realize that there is a power dynamics that gets played in effect on the board. And obviously we have heard so many stories where people get removed from the companies or the founders for different kind of expectations or responsibilities or perspectives. It is very important if you're a founder of a company or a fund to have few people from your side. And there's always this composition, like, okay, there's 2 people who are more founder focused and the other 2 people much more shareholder focused, and then I get an independent one, or 2 other ones are in when I say that shareholders focus, they're much more in coming from the investor side. So as a board of director or an advisor, whoever you're bringing to the table, if you're from the founder side, the management team side, you need to understand how much they're playing for you. So that is very, very important. And then again, when you are looking at various companies, as I said, I don't have much of an experience on the biotech side, but I can tell you a little bit on the fund management side, because I sit on few asset management funds board. We look at our opportunities like, okay, how we can make sure we maximize our funds return. What are we bringing to the table? What are we advising? Because there are a bunch of things that needs to be done. And in terms of compensation, things gets changed because when you're at a fund board, you have a certain amount of money that gets come into effect. So you get well compensated sometimes, because in fund, there's no concept of equity because such thing doesn't exist. And then when you are sitting on a company's board, and I totally agree, like 1% is something is given to someone who is bringing a lot of value to that particular company. And as a founder, I have seen people go a little higher above also, maybe that person bringing a lot to the table. And then you have, as David mentioned in the previous answer, like trophy or celebrity, people who are coming as an advisor, and you will do anything to get them on the board. So you may give more higher compensation. Now, I come from the sports side, there are
no celebrities there, right?
Yeah, no celebrities there. Yeah. So a lot of players, they use influencers model to access their Rolodex, not only for money, for partnership, for other things. So I know a lot of very well-known players, they use that opportunity to advise you because sometimes they can bring a lot of different kind of opportunities or skill sets that is needed for this particular organization. And it's more like a different kind of a promise market fit. So it totally depends. And then there's nonprofit board. So I think David's wife, we both sit on Harvard Kennedy School, New England Alumni Association's board. And on a nonprofit side, it's more like you are writing the check. you're doing the work, you are helping the mission, and you are part of that board because you believe in that mission and you want to help in certain way what could be done. So nonprofit is a very different kind of work, and I will definitely advise a lot of people to join nonprofit board because it's a different kind of fulfillment, but also be ready to write checks.
Okay, nice, thank you. And then, yeah, this is asked in the chat and also a question that we have. But what's the best way for a founder to find or ask someone to be their board, on their board of advisor, or as a mentor, especially for those celebrity advisors that you guys have mentioned? Yeah, why don't we start with Miguel this time? Yeah.
Yeah, I think it's a good question, and I think you have to look at it in terms of what is the skill set that you're trying to aim for first and foremost, and then once you've kind of identified the target persona, I think especially if you're an early stage company, I think one thing that's really important is just building a positive friendship and relationship with these folks, because ultimately they're going to be donating a lot of their time, and I don't expect, as David mentioned, that they're going to get compensated. I think they're really just going to be cheerleaders. So I think you really have to focus on first building a good personal relationship, letting them understand your business, why it's important, have them be believers in the business, engage with them for a few months, and then bring up the board of advisors. I mean, I was recently asked to be a board advisor, was mentoring this company for fun for 4 or 5 months just because I really liked it before that even came up as an opportunity, as even a possibility. So I think that's the kind of thing that you really want. And at the end of the day, I mean, you're building relationships, you're building friendships, you're building mentorship, and that supersedes all the technical expertise or know-how that they have that they can offer you.
Okay, and then in terms of where to meet these people and build your network and start these friendships and connections, yeah, what would you advise in terms of where to meet people?
Well, right now it's going to have to be over Zoom. I think previously, pre-COVID, I think a lot of those were either in conferences or asking to go for a coffee and ask for advice, and just trying to network with folks. I think the world's changed a lot in the last 7 months. It's probably changed that. But I think using LinkedIn, doing cold outreach, just asking to learn up and ask for advice is probably the best thing you can do at the moment.
Okay, yeah, and that's a good point. Yeah, cold outreach does sometimes work. Also, the Boston startup ecosystem is very vast, and there are actually a lot of events that took place in person before the pandemic, but a lot of them have migrated to Zoom and virtually, so it is possible to still meet people.
I can add to that factor. Another thing is that if you are, so there are 2 ways. There are people who are looking to be part of a company, to be on the board, and I'm talking about professional C-suite executives. Suppose they had been CEOs of MFS or CEOs of State Street, and sometimes they're interested to be on a public board, large cap, small cap, or they want to be on a private board. So there are different kind of organizations that you can be a part of. Like I am part of Private Directors Association, and it's an association that is it's a nationally owned members association where focuses that how we can accelerate and enable values for board of directors, but at the same time helping PE/VC-backed companies, founder startups, and then family-owned companies or ESOP-owned companies. So those are like various different backgrounds. And then there are other associations, which are more focused on the public side. So it's totally up to you. There are different kind of all this association, and me being a part of Private Directors Association helped me a lot because I feel I'm 38 and I still have a lot to learn. And being on certain big funds board, obviously I can bring my Rolodex in multiple areas, but I also need to learn what I can bring it to the table and what are the things that I should be aware of. And being in a community, like we have the Startup Boston community where you can hang around with other founders. So being up around other directors also gives you a lot of understanding and a lot of, advices and experiences which you have not achieved or gone through in your life. So it's important to be a part of that Rolodex. So I will strongly suggest even the founders who are at a very late stage and thinking of hiring board of directors or any funds or ESOPs who are much more advanced stage, they can be working closely with many of these associations, and this Private Directors Association is in Boston. So it's kind of a great platform. And I think you kind of get a lot of opportunities also, like, okay, things to choose from. Because when you're approaching someone, you are basically approaching, hey, do you want to be an advisor? It's a one-on-one. But if you are a late stage company, you want to choose and see who is the best. So then there's a lot of people to choose from that who can be the best fit for the role that you're looking for.
Okay, yeah, thank you. David, do you want to add anything to that?
That was a pretty thorough answer there. I guess the only thing I will toss in there is then much of this will be networking. So in the same way that you recruit for employees and other people along the startup journey, you're likely doing the same thing. And so just go top down and also kind of bottom up, right? So start with the network that's closest to you, but also start with also work towards your like dream advisors and board members.
Okay, thank you. So what are the differences for board members between advising different types of companies? So I think you guys had alluded to it a bit earlier, but if you could go more into detail of the different considerations and factors between advising a company that's in their pre-seed stage versus their series A, B, C, versus hardware, biotech, social impact, and sports. So yeah, maybe we can start with, David, do you want to begin with this?
Yeah, my perspective, I think I mentioned earlier, has been primarily around venture-backed startups and like a handful that might be more nonprofit or philanthropic. And so they're kind of the two big categories. And I think the main thing that I've seen is that the needs of a particular company evolve over time. And you just have to be pretty intentional about, this is really from the founder perspective, but you have to be pretty intentional about like who you have on the board, why they're on the board, and how you manage that board. And sometimes it gets out of your control in the sense that the composition gets lopsided. And when that happens, it becomes a dysfunctional board. And it's not that you want like full control over your board, right? It's not that the ideal scenario is actually not for you not to have complete control in the sense that you're guiding all the decisions, but like they don't add a lot of value if you don't have that composition, right? And at least for earlier stage companies, as they evolve to later ones, they tend to add more people, and then that balance is something that's harder and harder to get right. And as Guy actually mentioned before, it's very difficult to remove board members. And so once someone's on, they're on for a while, right? And that is really difficult to get over if you don't get it right.
Yeah, I'll add to that. And I think this is why, as a founder, it's so important to get your investors right. Everyone talks about, oh, you need good valuation, you need good terms, but to me, valuation is kind of irrelevant, especially at the early stage. I think really what you want is alignment from an investor that shares your long-term vision, and that you want to work with, because you're going to be interacting with this person who's going to have major decision capabilities over your life and your business and your outcome for many years, 5, 10 years, in some cases. So I think it's really important when you're fundraising that you pick an investor, if you're going the VC back route, that really shares your mission and that is a good person, has good, honest integrity, to be able to be a steward for your ability to build a business.
Yeah, I totally agree on that ethical and integrity part. Being on a board, you may see a lot of practices that are going to play in effect, and this may not happen in the early stage companies, more late stage and the fund side. And you need to be careful, because obviously as a board of director, you have fiduciary responsibilities, and I understand as an advisory board, you do not have that much of fiduciary responsibility. But when things come in perspective, from the regulation side, from the legal side, it can be a lot. And you need to understand how much you can take and how much you cannot take. So understanding that part is important, and also whom you're batting for. Are you batting for the CEO, the management team, or are you batting for the shareholders? And just as David and Miguel said, the composition is very important, but there's another factor to consider as a board member, that when you are coming into the table, if you see certain aspects that does not align with your values, how do you report to that? How do you connect with other members on the board? Because there's something called board dynamic, and it can be very, very different. Everybody has their own agenda of how to manage these things and how to report various things that happens. So you need to understand, like, if you are a part of a company or fund or a publicly traded company, how you are going to manage that board dynamics. And that this is coming from the advisory and the board of directors side also, and how you will be forthright and where you will draw the line. So I think the ethical integrity part and the values part plays a huge role as a board of director and also a board advisor.
Okay, thank you.
Yeah, and I'll just chime in a little bit more on that particular topic. There's absolutely something you got to do around figuring out what people's personal, as well as the institutions that they're part of. And I'll just give a little bit of a war story that at a time for one of the companies I was involved in, I guess I've been involved in enough companies that you can't tell which one this is, but I was involved in this one company where something really good was happening. And you'd think, okay, you got this board, we're all going to be great and fantastic. And it turns out that it was one of the most divisive moments we had in the company, because the various board members, they were associated with different firms that had very different life cycles in their own funds. And so we had one that was, let's just take the win, fantastic. There was another which is a little bit more kind of in the middle, which is let's weigh different options. Another one was, we're going all the way to the moon. And so you can imagine that dynamic where they all had the best interests in mind, right? But their perspective for what was defined a win was really different. And that was a major challenge within the company. That's something that you won't really know, but that's something that changes over time. So you want to pay attention to that.
And I really want to echo that point, because for you as a founder, I think what he's referring to is some sort of exit opportunity, where the founder could have made life-changing money, right? Several $1 million. But if that's not significant hurdle for the fund, they'll gladly reject it if they're doing it simply from a financial perspective and try to wait it out. So, and the vice versa can happen. You could make no money because you have a lot of stock preference. You're not going to clear your preference. You're participating preferred. So the founder, you have no intention to sell. And then the board members will say, the investor might say, well, at least I get 1x my money back or 2x my money back. I'll take it than writing it off. And you just wasted 7 years of your life, figuratively. So, I think these decisions that this person will make will have a very real impact on your life and your financial outcome. And I think having alignment and understanding what the threshold is for each board member is really important.
Yeah, I think you guys all make some great points, which leads me to this question, actually. So what are the practical best practices for an effective board? Like the composition, like the board members' individual backgrounds, their personalities, like how often should they meet? Like what's the frequency? Yeah, and any other like technical, like very practical suggestions you may have about the board.
I'll share one tactic, and this is mainly from the founder's perspective, which I think it goes a long way if you can assign board members homework. So sometimes in a board meeting, you'll have a specific agenda, and if you show up to that meeting kind of blind, right, where here's the agenda, 10 minutes will go by and you'll be off that agenda, right? And so there's just, we're all humans, and it never stays on. What I've seen to be particularly effective, both as a founder and also as a board member, is that if you you carve out sort of mental space for different board members. And so you may have one board member that's completely connected to the industry, then that person's homework might be between now and the next board meeting, come back with, you know, a specific recommendation or a plan around how to approach a particular target segment, or, you know, whatever that is. And so it engages board members in such a way where they have some skin in the game. And so if you don't do that, the danger in the meeting itself is, without having that sort of set up as a structure, you're in a place where, like, that board meeting itself can only go off track. And so that's just one tidbit that I've found works well.
Okay.
Yeah, one thing, I think another thing to add is, I think, you know, as a founder, you're always inclined to just share good news because you're probably an eternal optimist and you want the best outcome. But startups have a lot of bad news, and I think that, you know, the best way you can handle the board is be really upfront about negative news and share it several days in advance of a meeting. I mean, if you have a board meeting on Friday, you should be sharing it on Monday, so that these are the problems we're facing. You know, these are the potential solutions, and you come to the meeting prepared to give resolutions, as opposed to, holy crap, what's going on? Why is this happening? This was not news. This is news to us. So I think there's a cadence in terms of sharing information, both positive and negative, so that you're using and utilizing your board to make effective decisions and not act emotionally.
Yeah. I will categorically differentiate this question into two parts. One is like board of director and the board of advisor. So as an advisor, you're basically working one-on-one with the CEOs and the management team, and you know exactly what's going on and what you want, particularly for a certain skill set. So if there is a problem at the audit committee and I am advising on the software and technology side, I'll not be needed. If I am advising from the fund side, okay, with the LP Rolodex and other information, and I will not be needed if there's a particular late stage company is having some issue and their fund has to, you know, take care of that. So that's another role. And then advisory board guys also sit on the board of directors. They come and they listen. They mostly not participate when there's needed, because they are batting for the management team, for the CEOs. Now, from the board of directors standpoint, I will strongly advise the founder. Like, I have personally been in meetings where people gave tons of PowerPoint presentation, and then, okay, at the end of the presentation, these are my problems, and, you know, time is up. So you need to understand what you want out of your board. You know, you want the board of directors meeting to be much more brainstorming. So furnish all the information beforehand. Don't bother people with PowerPoint presentation. Nobody wants to hear that. So have the meetings more like a brainstorming. And it's very important that have one-on-one meeting with your board of directors beforehand and give them, you know, what Miguel said, that bad stories, good stories, and send all this information, and then bring them together. Hey, this is what I want to achieve in the next 3 months, next 6 months, or in a year, and what can be done. And I think the most important thing that for founders or funds, whoever it is, they need to understand these board of directors and board advisors are basically serving you or the shareholders of the company. So they have certain duties to follow. So if you don't define those duties, it becomes a massacre. So before coming to the meeting, you should know that what duties are assigned and what they are supposed to do or what they're supposed to bring it to the table. So having that aligned, and whoever is chairing that, whether it's early stage founder or late stage chairman of the board, or, you know, from the asset management funds perspective, there's also another chairman of the board. So understanding that perspective is very important. And the idea is to get the most out of your board members. Okay, so your board members, I have attended many meetings where I went there and I have no idea what I'm going to give or send. And then later on, we have one-on-one meetings. So don't do such mishaps. It's very important to understand that, okay, these are people who are serving certain kind of people and what can be done in that time perspective. And I think time value of money is very important to understand. Most of this board of directors and advisors, they are not employees of your company. They have multiple other things to do. So getting that time value from them, I think it's very important.
Okay, thank you. Yeah, and then in terms of the actual board, like how many people are on the board and how frequently does it meet? And like, you can give an example of a company in an industry, and like if they had the board members, like what backgrounds would these board members have? Yeah. Who wants to begin?
Well, I'll just take it from my personal experience of running my business. I think as I've mentioned earlier, I think early stage is really kind of finding someone who's a cheerleader and a jack of all trades who really understands startups in general. And then as that business progresses, it's probably more toward key functions and expertise. So as an example, we raised our Series B led by strategic investors. So these are strategics that big corporates that have interest in seeing our business succeed and can act as a channel partner. So I think, just knowing, where the business is going and building folks that are aligned in terms of the growth of the business and having that expertise. So for instance, in that Series B, this is BASF, a German chemical company that led our Series B, having Jacob, who represents BASF, be on our board, he's coming with a broad set of knowledge and expertise in the chemicals industry and chemical companies that are going through, growth stage. So I think, as the business progresses, you'll kind of naturally get inclination for folks that are driving growth opportunities within your business. I think early on, when you kind of have flexibility to pick whoever, my personal suggestion is to pick folks that are strong mentors of you, could be strong mentors of you and are believers of you as a person, and then have general startup expertise.
Okay, yeah. And then kind of to go on to that, like would board members, like would one be from finance, like a technical background? Yeah, and how frequently are the meetings generally, or does it range?
I don't know if you need as many, like each of those functional areas. I think it evolves over time. I'm a fan of boards that have odd numbers of people on them, right? So even I tend not to like, and whether it's like an investor board member type or like an independent board member type, that mix will also change. The frequency question, for early stage startups, I've seen as frequently as every 6 weeks, which is kind of a weird cycle, but 6 weeks is one where this is how frequently you're actually meeting, and then it kind of goes to 2 months, and then occasionally it goes to kind of a quarter as you go bigger and bigger. One thing that I thought was pretty effective on one of the startups that I was a part of was we alternated. Every other board meeting was like a deeper dive session. So we'd have like the 3-hour, weighty topic, assign homework before, let's get in and do the brainstorming piece. And then every other board meeting was actually like a 30-minute, we sent a write-up beforehand, and it was more of just like, here, we're just keeping you in the loop here. And it was all meant for just like Q&A kind of dialogue. And so I thought that was an interesting change that I hadn't seen in other places.
Nice. Okay. Yeah, I want to ask about this, but yeah, do you have any stories that you want to share, either of success or like even any big failure stories that you've had as a member of the board of advisors? I know David, you guys shared one earlier, but yeah, I wanted to see if, Gayatri and Miguel, you had stories, or if David, you wanted to share another story.
Maybe I can start with, so I sit on a company's board with Shark Tank guys and, the Singularity University founders. So there are a lot of celebrities on the board, and I'm kind of nobody on the board. So it's, as I said, it's important to understand the board dynamics, and also people who are, kind of trophy board members. They also bring a lot of different kind of a value. Or if you're on a board with CEO of a very large cap company, or you're on the board with someone who is a big sports players, or who, so you need to understand that kind of composition, how it plays an effect. And it can go in various different directions. And, it can be sometimes you're in a board, everybody's talking and you didn't get a chance to say anything, and then you can send out an email and say that, hey, this is what I think, and that's how it should be done. And then again, I don't have any bad stories, but I always feel, especially for early stage companies, they are still learning things, and over there it's very ad hoc meetings that happen. It's not like you are having a very scheduled board meetings, everything is scheduled and you know what you're getting out of it. So, and considering this is Startup Boston, I have personal experience where the founder doesn't know what they want out of the board meeting, or even most of the board meetings are not board meetings. They are like an ad hoc meetings, and they are a little bit lost. And then you work more as a mentor, as a director. So I think it's not a bad story, but it is very relevant to the fact that at an early stage, you're still figuring out things. So it's very important for an advisor or a board of director to guide you in a certain way if they also know what you exactly want. So I think I will request the founders to, I'll not say the word do your homework or things like that, but also to prepare before your meetings that what you exactly want out of. And sometimes if you don't know, that's also okay. You're like, this is where I am and I'm totally lost and this is what I want to talk. But it should not be like you have certain agenda and that agenda does not make any sense at the current perspective. So, this is my advice, more like giving some stories.
Yeah, I got a story. It was a bad situation, but it just shows, the board that I have is a really powerful and positively aligned board. I'm obviously really happy about it. But, this is a very recent story. I think, we had an LOI pretty much signed to sell the business back in March, right before the COVID pandemic happened. And then, at the advent of the financial markets crashing, to no surprise, the deal kind of fell apart. And, we were kind of banking on that deal we had maybe 60 days of cash. We had a letter from our bank to give us, a term debt loan, assuming the LOI was, all the documents were signed, to give the cash solvency until the acquisition was completed. And so, the board, and once that, the markets collapsed, I think it was in like March 12th or something, we quickly as a board, took emergency steps to give solvency to the business, was able to, get all the existing investors to reinvest, and really align the, the decision-making. So I think like this just goes to the show of, how important it is to have the right board members, in a time of chaos, to come together and be able to do what's best for the shareholders. And, now the business is in a good position. So.
Thank you. Yeah.
I'm surprised you guys don't have these nightmare stories. Like I have so many nightmare stories that
yeah.
Ones where you're I don't know. I mean, I try not to be too, call people out, but like there was one case where as a board member felt like I was like the bartender trying to bridge every, different opinion. And I don't know like why I was doing that or how I somehow was thrown into that sort of role. Another case where a disgruntled employee contacted all the board members trying to torpedo the company. Another case where as this is more on the operating side, but like, board members that out of the blue raise stuff that's just like out of left field, right? Like you're completely blindsided. As much prep as you could possibly do. It's like, how did that come up, and how did I lose the narrative around that? And so, I guess you.
I can give one story.
Come find me, so.
I can give one story. And we are a lead investor in that company. I'm okay to call that out. So
we're about 5 minutes left, but
yeah.
Okay.
Yeah, I'll just give it a shot. So it's an Israeli company, and we are like, hey, the next round, there's an investor who was taking so long to complete that, and obviously there's COVID-19 was going on. I had a meeting with that investor, and I was like, okay, what's going on? Why this is not being done? And we were able to fix that issue immediately. So I think sometimes the board of directors can be very helpful, but you need to ask those right questions. Yeah.
Okay, nice. So we have a few minutes left. Do you have any final thoughts or advice that you want to share with people in the audience on how to serve and support your portfolio companies? I think we steered away more to the founder side, so we can get back to this at the last part.
Natural thing. I think my main one is around be aware of the composition and the dynamics within a board meeting. The homework is a key thing, to give people homework beforehand, but also just be aware, like when you're in the meeting, whether you're a board member or a founder, that you will likely do a lot of the prep and back channeling even before, and not to make it sound like board meetings are all orchestrated, but frequently as you move from point to point on the agenda, it's very helpful to have someone else who's in the room who has responsibility to take a particular position. So it might not be as formal as doing the first vote and seconding the vote, but at least know what that person's position is so that they can serve as a positive factor within the meeting. And maybe the last piece is, I just took a quick cruise through the chat. It looks like there's a whole bunch of questions that we didn't tackle. And so perhaps what might be helpful is if we just kind of download the chat and each of the three of us can kind of chip in a little bit and maybe share that on Twitter or something as a follow-up.
Yeah, I think that's a great idea.
Yeah, totally agree. I'll just add one sentence that I will strongly recommend to have a very intellectual diversity on your board, but at the same time have diversity, not just of thoughts, but also community of people it serves. So the board matrix kind of reflects that, not just skill sets and leadership characteristics, but also, have more women on the board, have more diverse people on the board, because we sometimes overlook certain areas and thoughtful discussions that a diverse board member can definitely bring into perspective.
Yeah, thanks for bringing that up. This is probably the most diverse board that I've seen in a while, as I mentioned previously when we talked. But yeah, there's just a couple of minutes left. Miguel, do you want to share like a quick tip or something?
Yeah, I mean, I think, as David mentioned, if you're serving on a board, I think it's just really important to keep up to date with the business and have as many touch points as possible so that you're up to speed in terms of what the latest, issues are facing the company. And if you're looking to be on a board of advisor, I think it's just important to always remember that you're serving the founder first. And you really want to, make sure that you understand what their needs are and that you're checking in to make sure that you're fulfilling those.